Hello, guys, and welcome to the 15th episode of the Market Pulse series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So, as we all know, today is Thursday, always at 8 p.m. We cover the Market Pulse series. So, apologies for that. So, on this particular session, we cover what is currently happening in the markets. We try to identify the major trends. If there is a specific topic on schedule, then we basically cover that and try to help everyone grow and understand the markets. So, hello, Maurice, and welcome to the session. Hello, everyone. So once you join, kindly type hi on the live comment section. And these will confirm that everything is working just fine. So as we all know, there's a lot happening in the markets right now. And today, we'll be doing a lot of technical analysis. We want to find out the key price levels for a couple of major assets, beginning from gold. Once we cover these, hopefully everyone gets to gain from the session. So feel welcome. If you have any questions, any assets that you would like to suggest that we analyze, kindly type them in the live comment section and we'll be responding right away. And having said this, let's get this started. Of course, you know that this is not investment advice. It's not a recommendation to trade. And if you have any assets, any queries, then you can always consult a professional. So risk management must be practiced at all times. So the chart we are looking at today is a chart of gold against the US dollar. As you can see, it's trading on what looks like a rising wedge and more closely like a rising channel. The areas that are marked in yellow basically indicate the value areas or what we continue to consider as the value areas whenever you have a rising wedge or a rising channel. So the idea is if the market is continuously going up, then you want to execute trades around the same direction. So if the market is showing some momentum going upwards, you want to participate in that, but not all areas represent a good entry. So good entries tend to appear on the lower trend line, on the upper trend line. So in this case, if you had entered a buy position at around this area, you would have benefited quite well. Buy position here, you would have benefited quite well. This area, this, and this yesterday. And now today, we are having quite a similar position. So whatever is happening here is indicating a rejection of lower prices and pressure to push prices higher. So the long lower trend line, the previous one, our candlestick, is basically indicating a rejection. So sometimes we describe this as a rejection zone. So I can even type this right here. So these are rejection zone here. After this, you can see price closed here. And then in the current hour, already 7 minutes into the hour, it's indicating a strong entry by buyers attempting to push prices higher. So in this case, the obvious thing to do is to go for a buy position at the current price level, target a higher area that is along the upper trend line. So if you are to extend or extrapolate the upper trend line, it basically represents a position where the market is forming a higher high, potentially at this price level. So a nice target would be around 1952. Whereas if you want to set a stop loss, then it will definitely go just below the previous level, somewhere around this area here. So some price level around 1917, 1918, or thereabout. So that's basically how we go for such a continuation type of position, looking to benefit from a bounce from the lower trend line as the market continues to push higher. So from the daily chart, we all know that since the beginning of the year, gold has been on a bullish momentum. For the entire December, it was a bullish momentum. And also November last year, it was a very strong bullish momentum. So it's a 3-month continuity where we have seen gold continuously push to higher levels. So this could potentially move all the way up, but then this doesn't discount the point that the the market could eventually break lower and push even lower. So the risk is that the market may eventually push back lower and get to the previous low and even move it to the lower side. But then if you acknowledge you are wrong, then you take a loss at around the rejection zone. But then if you're right, then you benefit as the price continues moving higher. And that's the bullish case for Bitcoin. Sorry, not Bitcoin, but for gold. So we're expecting some further upside. So in terms of fundamental analysis, what we have been observing is a majority of central banks going for a gold rush, where they are continuously buying gold at a rate that we have not seen in over 55 years. So in the third quarter of last year, we saw central banks majorly buying more gold than they have done over the last 50 years. So this gold rush is driving the momentum, and at the same time, the fear of having a recession in 2023 is creating this potential gold run, where everyone is trying to buy gold to protect themselves from the eventual risks of having a recession in the economy. So, as I already mentioned, if you have any questions relating to the presentation, feel free to type that in the live comment section. If you have any commentary, any asset that you'd like us to analyze and discuss, just type that in the live comment section, and we'll be looking at that, trying to identify the key levels. So hello, David. Hello, Mark. Hello, Eric. Hello, Charles. Thank you guys for joining the session. Hopefully we get to provide value in this particular session. So now that we are through with the gold setup, let's look at something else. This is Euro USD, currently trading in a bullish channel. For a while, it was trading on a sideways momentum. If you count the number of days, it's 1, 2, 3, 4, 5, 6, 7. Then on the 8th day, there was a breakout up on the upper side. So just like creation, 7 days of movement in the sideways, then a break towards the upper side, and then consistently pushing higher. And now today we had a very sharp downfall, which basically tested the lower trend line. And now there's a potential that the Euro USD could have found ground here and could be potentially pushing upwards. So this is not confirmation enough. I prefer if my price bounces right at the trend line. However, it looks like an early bounce from the lower trend line rather than a confirmed bounce or even an extended bounce, just like we saw with gold. So notice that with gold, got to the trend line, broke the level, went way lower, but indicated a very strong rejection. It's now bouncing higher, but with Euro USD, it hasn't quite got to the lower trend line, but still a bittersweet. I wouldn't say it's a high probability trade, but potentially the market is finding a bottom here in unison with yesterday's low. So there's a good side. Potentially we could see a good pump towards the upper side, perhaps towards the previous high, even around the upper trend line. So for UK oil, this is what we are seeing. So if we do a top-down analysis, and we'll try to find the right asset here. So this is the daily chart for UK oil. Clearly, it's a bearish channel. It's a bearish pattern where the market is consistently forming lower lows as well as lower highs. So this is conversant with the trend here. So since this particular period, moving down and then up, down, up, down, up. And this seems like the sequence in UK oil, or what we basically describe as Brent oil. However, from the most recent price action, you can see price was going down. There's a pattern for that. That is when the price was going down. So it can be clearly identified from this particular trend line, where it was facing resistance here, then here, and then here, then here. Then eventually the price broke this level. It tested for a while, went up and then up before pulling back down. It tested the same trend line, then now moving upwards. So now what we are experiencing is the market attempting to form a new trend line towards the upper trend line. Then from the lower side, If you were to do a dead trend line from this low, this other low, then this seems like the path. So if I now zoom out, then it makes a lot of sense to identify this particular trend line. The market is now headed towards the upper trend line, but the longer term trend line seems to be bearish. So a bearish trend line, but also a trend within a trend. In this case, a bullish trend happening in between. So from this swing down, we test a couple of times, all the way up, down, all the way up, and then down. But we are yet to hit the major resistance. And this is somewhere around the $90 level, or even 91, 92. So once the market gets to the upper trend line, then potentially we'll be looking for short selling positions. So as we speak right now, I'm very bullish on UK oil, or what we call Brent oil. As you can see, since the beginning of the year, this was the 3rd of January, first day of trading. Our market was largely bearish, but since getting to this bottom, there has been a consistent push towards the upper side, an attempt to go back down, but then a continued movement towards the upper side. Then this week, we started with this bullish momentum, pull back Tuesday, further downside, Wednesday sideways, Thursday some upside momentum. So potentially, as we approach the end of the week, there's a good opportunity that we could see the price running all the way up here to a price level of around $89.562. So there's a good chance we'll be seeing that the price of oil continues moving higher. And this is along the same theme that we are seeing the price of oil attempt to push even higher and get to the upper trend line before we determine whether at the upper trend line we'll be moving further back downwards, or a strong reversal in the opposite direction, where potentially we'll be seeing some upside in oil prices. So key thing to consider supplementary is that, one, the OPEC countries have maintained their stance that they are going to continue cutting oil outputs. In the last meeting, we decided to cut output by 2 million barrels per day. So on the demand side, we are seeing the Chinese economy reopening. With the reopening of the Chinese economy, we're expecting further demand. Remember, China is the biggest importer of oil globally. India is also quite aggressive in terms of production right now in competition with China. So there's a good chance we will be seeing India and China importing even more oil, creating some higher demand for oil, and this could drive oil prices higher. So this year has been quite positive, despite being just in the 4th week of the year. So we still have 48 more weeks to go, and this basically represents some potential upside for Brent oil. So on the negative side, we know that the global economic situation is slowing down, despite seeing positive data earlier today in the US, that is GDP data. And also the last GDP data for the UK was quite positive. China is also quite positive. So economic production is expected to expand as long as GDP is positive, and this creates higher demand for oil moving to the other side. However, if we indeed get into a recession and business output goes down, then eventually we'll be expecting the output for oil demand to go down and potentially the prices. But then compare the demand versus supply. So also it's very important to consider the policies that are being implemented by the OPEC plus countries and how they're looking to regulate the supply of oil in the markets. Then, on the other hand, if you go through to AUD USD, we know that for the last couple of years, the Australian dollar has been losing against the dollar, with a major shift happening around August, September last year, where we saw the Australian dollar strongly dropping against the dollar, getting to a multi-year low of 0.61756. So this is not something we have seen in recent years. The last time that we saw the Australian dollar losing this much was during the COVID crash in around February 2020. So since then, we have seen the Australian dollar make a very strong comeback as the Reserve Bank of Australia became very aggressive in raising interest rates. And with this aggressiveness, the Australian dollar recovered against the dollar. Currently, it has broken the upper trend line, this level here. And pursued even higher prices. So since breaking this level, we are seeing a momentum towards the upper side. So from the forward chart, it seems like a rising wedge. So you can see the wedge from this trend line and this trend line on the lower side, with a break towards the upper side and then an attempt to pull back and retest the lower areas. So after breaking this area, we saw the retest happening yesterday. Today, we have seen some continued activity towards the upper side, then a pullback, which seems to be testing the same area. So potentially, the idea is to look for this. Maybe the market happens to bounce from this area and then continue even higher. So remember, the dollar is quite weak in the markets right now. So as long as the weakness continues, then the Australian dollar continues to rally even to higher prices. So the idea is to look for an optimum entry that represents the area that other buyers are making an entry, especially the smart money in the market. So if you look at the dollar index and how it's performing, this is it. First week opened here, up and then down. Second week, some further downside momentum. Third week started with bullish momentum, bearish, bullish, bearish, ended here. This week we opened here, went up, down, up today. So today the dollar was quite strong, making this strong momentum upside. But following the price action, it seems like we hit resistance and the dollar is going back down. So if the dollar continues back down as projected, then we will be looking at buying other currencies and pairing that to the dollar, where we'll be expecting the dollar to lose further. So if the dollar is losing further against other currencies, then in this case, the Australian dollar will be gaining against the dollar and pushing towards the previous high, and some perhaps even higher than the previous high that we saw early in the day. So as for equities, there's a good chance that we'll be seeing some further upside before the drop. So remember, this is the story of last year in the S&P 500. Price opened the year by forming a new high. This was an all-time high for the S&P 500. Since then, you can see it has been a consistent trend that the market is making continued pushes towards the lower side, moves all the way up and then pushes lower. But the previous low is significantly higher than the lower side and also higher. This is the lower side, indicating a weakness in the trend. But then at the current price level, there's a good chance that we could be seeing the S&P 500 moving towards the lower side. So from what we are seeing here, it's a movement towards the upper trend line. Also from the lower side here, it seems like a movement along these lines here. But then once we get to the upper trend line, there's that expectation that the market will meet a resistance and now start moving downwards. So it's also important that you understand that there's a golden cross happening in the S&P 500. And whenever we talk about golden cross, it's very important that everyone understands this. So on the daily chart, when you're looking at the S&P 500, I have two moving averages here. One is 200 moving average, colored black. And the other one is a moving average of 50, colored in red. So whenever there's a crossover between the two lines, it's most of the time indicates a change in trend. So we recently saw this happen. So this is the golden crossover on the daily chart. So the daily 200 average versus the daily 50 average happens late last week. So from this crossover, we saw two consecutive candlesticks moving upwards. The third one was almost a doji. And then yesterday, there was an attempt to move downwards before the attempt to move upwards today. So whenever there's a golden crossover, it represents a very important change of trend, and it's taken as a very strong signal, especially by technical traders. So in this case, the 50 is crossing the 200 towards the upper side, indicating a very strong movement towards the upper side. So this could explain the strong rally that we saw in the S&P 500, especially towards the upper side. So from the forward chart, this is what we had. Golden crossover happened around here. Our market faced a nice bottom, rallied all the way to Friday, Monday, all the way up Tuesday, Wednesday back. Then you can see today being Thursday, an attempt to move even higher. And now we are approaching a very important level that we would consider as the resistance level for the last 1 year. So it's a very strong level that you want to consider when making your decision. And this is around $4,070 per share. So from this price level, my overall expectation is that the US is not having its best of times. Interest rates are very high. Average wage is slowing down, but at the same time, housing market is slowing down. Tech companies are firing staff. They're not looking to make major additions in order to improve their earnings and their performance. So eventually, the stock market is bound to go down. So whereas on one side, we're having a very strong bull run towards the trend line, then this could hold up as a very strong resistance, and there's a good chance we'll be seeing the market move back downwards towards the lower speed. So the idea is to look for a short selling position. I don't think the current fundamentals are very supportive of a stock market rally. So in this case, with very high interest rates, companies are firing staff. At the same time, inflation is still significantly high. Consumer spending is slowing down as the American consumer gets weaker and weaker. So it doesn't basically imply that the bull run will continue forever. At some point, I expect the American consumer to weaken and we start seeing lower prices. So with this in mind, 4,070 seems to be a nice target to start looking for short selling positions. So once the market gets here, it makes a lot of sense. Look for price action and look at a potential where the sellers could be entering the market. So anything indicating a strong entry by sellers, something similar to this, would be a signal to go for a short position targeting even lower prices. So USD yen, we all know what has been happening. Last year, a very strong momentum upwards as there was a huge divergence between the two monetary policies. Fed aggressively hiking interest rates. Bank of Japan maintaining negative interest rates as negative 0.1. Inflation remaining very slow in Japan. And at the same time, the Bank of Japan running a very strong quantitative easing program. So since this particular period of time, what we saw is the Bank of Japan intervening in the currency markets. And then now we are seeing a very strong inflation hitting Japan. And this is helping the Bank of Japan achieve its targets. So now we may see the Bank of Japan reconsidering its targets. So from the recent meetings, we saw the Bank of Japan basically saying, yes, they have hit the target, but they would like to see inflation being consistently holding at that level. So they might want to hold the interest rates at 0.1 and continue doing quantitative easing, see inflation holding up at that level. However, if inflation moves way above the current level, then the Bank of Japan is about to make changes to the policy and make stabilization of prices a priority. So in that case, there's that potential that the Bank of Japan could be eliminating the quantitative easing program. And with eliminating this program, it will be in preparation for some rate hikes. So that's why a lot of investors are already betting on a very strong Japanese yen. And this is from way back in October. So this particular trend could be seen continuing in the markets. So very strong US dollar against the Japanese yen has been quite an issue. So we might be seeing this particular trend changing. So for now, we've been seeing the dollar strengthen against the yen for quite a period of time. And this is about to, this being the third week. And now, once we get past the upper trend line, the idea is to look for potential entry by sellers. And once this happens, then we target even lower prices to short the US dollar against the yen. So as for the UK 100 or the FTSE 100, we have seen this particular market hitting a level that we have not seen in a long time, an all-time high. And in this case, we are expecting that the UK hitting an all-time high is only a facade. I don't think the UK stock market is that strong. The UK consumer is really affected by high inflation, which currently stands close to 10%. And at the same time, the energy bills are persistently high. basically affecting the consumer. So if you're a person living in the UK, you're spending a lot more money paying your energy bills, which means that there is a foregone expenditure which you could have done purchasing other items. So this means that it doesn't make sense that the UK 100 or the FTSE 100 index is trading very near or close to the all-time highs. So this basically means that the UK 100 index is completely overbought, and there's a good chance that we will be seeing some further downside. So this strong rally extending from December and also from November last year is an indication that the market is completely crazy. At some point, we'll be seeing some form of pullback. So what we saw is the market breaking a major trend line. This was a major trend line, a major resistance level that the market managed to break earlier this month, continued pushing even higher, but now we are seeing the weakness in the trend. So from the forward chart, we saw last week being bearish. This week is attempting to be even further bearish. So personally, I think the market will eventually pull back down towards the lower side or even towards the lower trend line. So a potential for the market to pull back down towards this area is highly likely. So the idea is to look for short selling position whenever the market gets to the upper side. So if you use a smaller time frame, you can always map this area here. And also, if you map the lower side, then it seems like there's some form of support here. So this being resistance and this being support, the potential is to look for a rejection of higher prices here and a break of lower prices here. So the bias is to be on the short selling side. So if market rejects this area and identifies a potential to move down lower, you go for a short selling position here. And also a break below this area may indicate potential to go even lower, targeting lower prices at the break of this level. So that's it for today. Any questions for me? Any markets you want us to discuss today? I'm very open to that. Also, if you have any direct questions, I'd like to answer that. So hello, Charles, Eric, and also Maurice. Thank you guys. Thank you for the questions. There's a suggestion to check on pound yen, AUD Canadian dollar, Euro New Zealand, pound USD. Evening, Tony. Thank you. Robert, welcome to the session. Good evening, Rufas. Good job. You're able to do live trading with your account, please. No, I would like to do that. I would be very much happy to do live trading with you guys. But according to the regulations with the CMA, we all know that the FX PESA is not allowed to give investment advice. So if I was doing live trading on these sessions, then it would get us into a lot of legal trouble. So we cannot be able to do that. So we try and do as much analysis as we can and identify key price levels, but we cannot do a live trading. So pound yen, AUD CAD, Euro New Zealand, pound USD seems like a lot to me. CAD yen, pound USD. I don't know if I'll be able to answer all of these, but let me try my best. So let's start with the first one, pound yen. So as I always say, I try and do a top-down analysis. It's always good. The daily chart in pound yen seems very chaotic. I can't identify a very strong trend in this market, which is sometimes a red flag of a market that I don't trade. If you look at this low, this low, this low, doesn't seem at all attractive to me. So it's not something I want to be actively trading unless price was trending at the most extremes. So if I go to the 4-hour chart and then I slow down, this is way above, this is way below. So perhaps an in-between trend line, trying to identify the resistance here. And then now we can say there's a swing here, up, swing here, up, swing here, up, swing here, up. So now we identify a key price level, which is this resistance. So 161.752. So if I was anything but a pound yen trader, I would be looking at 161.752 with the potential that the market gets to this area. And of course, we know that if it's a major resistance level, then the outcome is binary. On one side, price breaks up and moves even higher, and price pulls back down and moves to the previous low. So today's low seems like a key price level, 159 point. Seems like around 45. $159.478. So this could be a nice target and even higher if price manages to break that. But the key level would be 161.752, but it's not the most interesting asset that I would be happy trading. So for now, I'm very reserved on this one. There's a major resistance here, just support at 159.478. So identify the area around 151.75. So other assets, AUD CAD. So as I mentioned earlier in the group, we know that if you're trading the crosses, it makes it an even double work to do your analysis. So for instance, if you're trading AUD CAD, you should know that this is a derivative of two other currencies. So AUD CAD is not like a major pair, it's a cross pair, where on one hand, we have Australian dollar trading against the US dollar. So it's more or less like trading AUD USD and at the same time trading USD CAD. So you are trading three pairs at the same time, AUD USD, USD CAD, and AUD CAD. So whenever you are analyzing fundamentally the AUD CAD currency pair, you would have to go to AUD USD, look at the strength of the Australian dollar against the US dollar, then go to USD CAD and look at the strength of the Canadian dollar against the US dollar. And once you understand perfectly what the two are doing, then you go ahead and trade AUD CAD. So the crosses are not as easy to analyze as the major currency pairs because it involves more work. So that being said, let's look at what we have with this particular pair. A very strong Australian dollar gaining against the Canadian dollar. So we know yesterday that the Bank of Canada decided that the most recent rate hike, which was 25 basis points, was the last rate hike of this cycle. So they are not looking to make any other rate hikes. So with the Canadian economy not looking to do any other rate hikes, basically means that they are no longer looking to strengthen the economy, their currency, sorry. So there's a good chance that we'll be seeing some further weakness in the Canadian dollar. So despite this being a major resistance level, where you are looking to short, to buy the Canadian dollar on the long term, the fundamentals are saying otherwise. So the fundamentals are saying that the Canadian dollar could remain weak in the markets, and there's a good chance that the Australian dollar will continue moving up higher. So for instance, if you look at the economic calendar, we know that the economy of Australia was basically seeing very strong momentum upwards in terms of inflation. So if you go to the calendar, just want to find Australia and what happened earlier this week. So you can also do a filter here. Go for none and then Australia, apply filter. So this is what we saw in the CPI. So inflation moved from 7.3% up to 8.4%. So this is a very strong rise in inflation. And this basically forces the Reserve Bank of Australia to continue hiking interest rates. So as long as the Reserve Bank of Australia continues hiking interest rates, this is bound to strengthen the Australian dollar against the Canadian dollar, which would eventually break this particular resistance. So notice that there is a very strong trend here where the aggressiveness of the Reserve Bank of Australia has pushed the Australian dollar even higher against the Canadian dollar. So in this case, if I was a trader in this particular market, then I would be looking for bullish positions. So notice that there is a very strong trend line on the 1 hour chart, which I can identify as following this particular path. So anything that appears like a pullback in this market would be taken as a very positive idea to go for a bullish position. So despite the strong pullback as a result of the technical resistance at this area here, that is 0.95136, I'll be looking for a bullish position. So sometimes the fundamentals are very good because they help you identify the direction to take in the market, a bias that is based on the direction of the central banks. So in this case, I'll be looking for a bullish position. So ignore the pullback and look for a continuation of the same trend, and that would probably serve you right. So the other thing, I know you guys have more questions and more markets you want us to check on. Of course, first come, first serve. So pound yen, AUD CAD, and then Euro New Zealand. So this is what we have in Euro New Zealand. Doesn't seem at all like a major or a very strong trend line in this market. So clearly, if you use the most extreme prices, this is what we have on the most extreme levels. Most extreme prices on the lower side. This is what we have, some slight bullish momentum. If you go to the 4-hour chart, it seems like we have a sideways momentum here. So if I was to be drawing these, I would say for this period, the market has been moving sideways. So the overall price momentum for the area marked in yellow is sideways like this. So the market is neither going up or down, it's just trending with resistance and support. So that's the overall direction. And now if you take a smaller time frame, which is the 1-hour chart, and you zoom out, it seems like the market is basically approaching the lower trend line. So I would only be interested in trading this market if price would hit this area, or if price would be hitting this other area. Otherwise, in between is completely against me. I don't think I can identify a high probability trade trading in between. So for this period, I would simply stay out until the market presents an opportunity where there is a high probability that the market will move in one direction. So we keep on going. Pound USD, I think we have already covered that. No, not yet. So it's very similar to what we had in Euro USD. So you go to the daily chart, you check that out. We know that for the last 1 year, the pound was significantly losing against the dollar. So this seemed like the major trend line influencing the movement of the pound. This being the ceiling or the resistance. So we look at the floor, clearly something like this with an extreme price happening somewhere around September. This was the extreme price. Market made a very strong recovery immediately, broke the upper trend line, moved up in November, December even higher before pulling back, and January we are moving even higher. Now we have a perspective of what we are seeing in the pound, this being the major resistance level here, and now the market testing the resistance area in the week on Monday, pulling back down and attempting to go further upside. So for those who understand this particular pattern, then you probably understand the idea or the concept of a cup and a handle, which is quite a popular pattern in trading. The market forms what looks like a cup and then a handle before continuing even higher. So the idea of a cup and a handle pattern is basically a continuation pattern. The market goes back down, attempts to recover in a U-shaped pattern, takes on a handle, and then eventually pushes higher. So it's basically taken as a continuation pattern. So from here, the idea is to look for the market breaking this particular resistance. And if it breaks the resistance, then potentially an even higher price. So that's how you basically check that one. So in this case, I'll be watching for the market to break 1.24474. So if I was on the 1 hour time frame, then I will probably graph this area here as my support resistance level, extending this way. But then we can see that the resistance kind of became flat after the double top here. So if the market happens to break this area here, then you go for your position. But then if it goes down, then you look at this particular trend line here, and a bounce from this trend line will basically indicate some further upwards momentum. Whereas if it's a break, then we go for a short selling position. So this particular price level seems to be the most important for pound USD, around 1.231. So 1.23091 or 1.31 seems to be the area or to be the area of interest. But then if the market rises up, then the area of high interest becomes 1.24474, which was the previous high, because a break would signify some further upside. Rejection would signify some further downside towards the lower trend. So here are three scenarios. One, straight up to the resistance. Two, straight drop and then bounce from here. Three, straight drop to this area and then further downwards. So you have to be observing of action at 1.24474 and action at 1.2309. So let's see what else. So the current war, how is it going to impact the markets? Gold is the big impact in the markets. We have already discussed gold earlier in the session. So if you came in late to the session, just go through the session recording and look at the very first 5 or 10 minutes. This is where we took a lot of time discussing gold, and you will get a lot of insights on what is happening in gold. So this is something that we have already discussed today. Is there physical training in Nairobi? Yes. We normally have physical trainings happening in our head office as well as our satellite offices. So if you come to Westlands from Monday to Friday, we always have physical trainings. They're handled by Edwin Wangai. We also have physical sessions happening in Kitengela, in our office in Thika, in our office in Nakuru, as well as Eastleigh and Eldoret. So in all these offices, you will find trainers and you will get all the necessary help that you need. So one last request in this case is from USD, and this is basically the Dow Jones, for those who don't know. Open this chart. So the USD was the best performing index among the top 3 indices in the US. So S&P 500 was a big loser. NASDAQ was the worst loser. In this case, the Dow Jones was the most resilient, being down 9% for the year. So what we are seeing here since the beginning of the year, we are having a bearish momentum marked by these 2 trend lines. So this was the momentum last year. Market consistently pushing downwards before breaking to the upper side of November, and December pulling back down and then making some recovery. Then this year moving towards the upper side. So with this in mind, if we now move to the 4-hour chart, we have some new trend lines developing. So if you look at this, it looks like a solid support level in this market. I'm trying to change the color so you can see the distinction. So the maroon line represents some major support from the bottom in November, bottom in December, and bottom in January. Whereas if you look at the upper side, then it might make sense to compare the high in December versus the high at the beginning of January. And it seems like this particular market is trading in what looks like a triangle. So a very strong swing up and then down, a couple of retests here, a rally all the way up, and then a drop down, and then a rally up. So now it seems like we are in mid-swing towards this area here. And once you get to this area, then it might make sense to look for a potential trading opportunity back down towards the lower trend line. So the key price level to be watching in this market would be the yellow zone here, which is 34,124, and also the area on the lower side, which is somewhere around 33,164. So these price levels could be the areas we are observing, looking for a potential entry in short sellers or a potential entry in buy side traders. So these two price levels could be important. So as for now, it seems like we are headed further upwards. So key levels to watch is the breaking of this area here, which happened to be the major resistance for this week. So you can see Monday, Tuesday, Wednesday, and today being Thursday, there's a very strong resistance here. So if the Dow happens to break this level on Friday, then potentially go for this area here. So thank you very much, guys. Thank you for your time. Thank you for your commitment and engagements. I always appreciate these, and I hope to see you on the next session. So where specific in Nairobi is the physical trading. So this is in Oracle Towers. Sometimes people refer to these as the Delta Towers. So this is in Westlands. So I'm typing these as we speak. 12th floor. So you just have to get to the reception and ask for FX Pesa or EGM securities. So thank you very much, guys, and I hope to see you on the next session. And good night, Tony. See you on the next session.